Hello, ladies and gentlemen from around the world, previous subscribers and new subscribers, welcome. And also a big shout out and hello to my fellow traders right here in the Toronto area. This is Toronto, Canada. This is the city I reside in. And today we're going to be looking at another video to see what kind of trading opportunities exist in this week, June the 25th to the 29th. Now, if you follow my weekly analysis, you know that you can make a lot of pips just following my weekly videos. Last week, you could have made over 350 pips, which included 7 winners and 1 losing trade. Okay, we're going to slide right over to the risk disclaimer. You can always pause the video and read this important information. I do provide you with some levels and some trading, really good trading ideas, but remember, everything I do is for educational purposes, okay? And I'm really trying to teach you to become an independent trader. I'm not giving you any investment decisions at all. So importantly, view this video at your own risk. Okay? Okay, here we are. We now are looking at the Euro USD daily charts, and when I say daily, each candlestick, you see each price bar here is 1 day's worth of price movement. We use for all of our analysis and for my live trading and the traders from around the world who are subscribing to me, we do use a broker that has an end of day trading cycle, which is 5 p.m. Eastern Standard Time. That's 5 p.m. Eastern Standard Time, which coincides with the New York close. Okay, so that's the broker that we use. So take a look right over here. And last week, you can see all the price action. What happened after this red vertical line? Take a look. Last week right here. So we have 6 candles in total. Well, this is the previous Friday, but then we have the first candle, white bullish candle with a bit of a tail below the body. That is the Sunday, Monday trading. Then we've got the Tuesday, the Wednesday, the Thursday, and Friday. Okay, so now you know what you're looking at. Okay, and last week there were no trading opportunities at all based on the levels I provided for you. So for this week, we're looking at buys above 116.83. My bias is to the upside, and you can see a gray rectangle. This could be your target right over here. So 116.83, and for a price to come down lower, and if you think price is going to go down lower, you'd have to look for sells below 115.06. Okay, so that's the Euro USD. We kind of hit a double bottom. You can see there's look at the previous left. Always look at the previous left to see where previous support or resistance is. In this case, this is support. And again, you can see price here exactly the same. So this is basically a double bottom. Okay, price is now, I believe, on its way up. And that's why I've got this level over here. Okay, so we're going to now jump to the British Pound USD. Excuse me. Last week, with the price level I had indicated in my analysis, you actually could have made about 30 plus pips, okay? And for this week, we're kind of, right now, we're not too sure if price is going to go higher, but if it does, you could look at buys above 133.24. To the downside, you could look at sells below 131.05, okay? So that's what I see for this coming week. Now, last week I said you could have made over 30 pips. Not a lot of pips, but based on my level, I said sell, take a sell below, or look at sells below 132.09, okay? 132.09, and I'm going to draw in that level. Hold on for a second. 132.09, which is about there, okay? Right about there. And take a look here. So you can see getting in, you would have gotten in on this candle right here, and then, and with the close of that candle, you would have made approximately 30, 31 pips or so. Now, what I always advocate, and again, a real quick lesson on how to view my charts. When I give you these price levels, immediately put in your horizontal lines, okay? And let's pretend that this is last week. So for last week, I said you could look at sells below 132.09. So let's put a right there. I put in my horizontal line, okay? And that would have been, let me just drag that down a little bit lower. 130, right about there, okay? So 132.09. So you can put in both level, like in this case for this week, you can put in a horizontal line here, and look at, watch your charts every day, and especially switch your charts to the 4-hour chart. So I'm going to do that right now. You see, there is my horizontal line I placed last week. This is the price action to the right, okay? So I want you to understand this. All these candles, this happened last week. Then all of a sudden, if you would have had a sell stop right there at this horizontal, below my level that I posted, you would have made from here down to here at least, okay? And down to here by holding on to the trade, okay? So your stop loss would have been above the previous swing high right there, okay? You would so by getting into a trade right here on the, based on the 4-hour chart, you would have made 1-to-1. This is your risk. Take a look. This is your risk. And let me just use my crosshair tool to show you exactly what I mean, okay? So getting in here, having a sell stop order here, pending sell stop, your risk, I'm using my crosshair tool, just above the previous swing high. Do you see it's the middle number says 602? Okay, ignore the last digit, the 2. And so you end up with a 60 pip risk factor, 60 pip stop loss. You're trying to make at least 1-to-1. Okay, take a look. There's your 60. Take a look at the middle number again, right? So you see price did come down to here at least, but price eventually went all the way down to here. Look at the middle number. It shows 109. So that's almost double your double the 60 pip stop loss or 60 pip risk. So you almost would have made a 2-for-1. And this is for those people that don't understand how to understand risk to reward. Okay, so let's take all that off. Let's go to the next chart. And we're going to move right along to Australia USD. Here we go. And last week, again, on this one, with my analysis, you would have made 33 pips or over 30 pips. Now, for this week, you can see here, price came down, established support here, and bounced higher with this huge candle on Friday, okay? So we had a huge up day. So right now, you could be looking at buys above 0.7454 and sells to the downside below 0.7343. Price would have to come down below the swing low for it to continue going down lower. Short-term momentum, that's this indicator right here, shows that the downturn, the downtrend is being exhausted, and we could possibly have a newer uptrending pattern, at least to this resistance area. Also, when and let me just take that off. Okay, clear the screen. If price does go up higher to this area here, remember, you could use this gray rectangle as resistance, which it is, okay, and price could either bounce from resistance, come back down, or go higher, okay? So, but I'm thinking higher above 0.7454, okay? Just be aware of that. So if you do take a trade above there and it does go higher, watch out, possibly close your trade after 1 day, okay? So let me take that off, and now we get to gold. Gold has been coming down all last week, has been coming down. We're making a slight reversal here, And this looks like a bit of a reversal pattern, at least up to here. So you could possibly look at buys on gold. New Zealand USD. Now, I'm going to, again, show you a little bit more in detail what happened last week. For this one was pretty easy. You could have made over approximately 70 pips last week, okay? And for last week, I said, take a sell, or you could look at sells below 0.6934. So let me actually draw in a horizontal line. So last week, that was one of my levels. The sell level was sells below 0.6934, okay, which is right about there, 69.34. Let me just drag this down one click, okay, on the MT4 platform, 69.34, which is right about there, okay. So you see this red line? Would have taken a sell trade below here, you would have made all of this, and you see price closed on this big black candle right there, at least 72 pips there, okay. So that's now again, remember I said when you see my levels, in this case I've got a buy level here, a sell level here. So for last week I did mention a sell below 0.6934 right there. I've drawn in this red horizontal line. Let's now move the chart to the 4-hour chart, okay? For an earlier entry, you can see what happened. Price went sideways around there, and you see price went down. There's the pullback. Okay, let me just draw that in for you. So price is down. You might not have had a sell stop. Maybe you're watching price to see what it's doing. And always remember, wait for the pullback. There's the pullback, okay? So pullback. And the easy read charts, and guys, this is so important. You're looking for sell trades only. You're only looking for sell trades. Why? Because we have pink below blue. Pink below blue means you're looking for a sell trade. Now, here's your first candle that breaks below the 8, okay? Breaks down here. Okay, you can see this big black candle. In my course, I have this course called Forex Success in 5 Weeks. So with this candle, this is a pullback candle or signal candle. It's called the aggressive pullback. Right there, you get in at the end of that candle, at the open of the next. Stop loss right there. Okay, so entry, stop loss. Let me change to a crosshair. So, entry to your stop loss, which is above. Actually, stop loss could be above this big black candle right there. The big black candle. Look at the middle number, and it's pretty low. It's 315. Ignore the last digit, the 5. You're left with 31 pips. So there's your risk. Your stop loss is set at, well, I would always set the stop loss a few pips above the candle. So let's say in this case 34. You're looking for at least 34 pips 1-to-1. You would have made it right there. Okay, you would have made it with this first big black candle that dropped down, and holding on to the trade, you would have made at least even close to 89 pips. Do you see the middle number? It says 895. Ignore the last digit, the 5, and you're left with 89. So you would have made in total, by holding on to the trade, 89 pips. So this was a big winner, the New Zealand USD. And again, I'm just showing you, when you see my levels, I'm showing you my levels on the daily chart, daily, right? So draw your horizontal line at your levels, okay? Draw a horizontal line here, draw a horizontal line there, switch to the 4-hour charts, and wait for something to happen, okay? So again, let's go back to the H4. Oh, I'm sorry. We'll do that on the next chart. Let me just take that off. Let me continue with the US CAD. Now, the US CAD was a huge winner last week. No kidding, guys. I mean, just go back to last week's video. Find my video from last week, and I said that you could look at buys above 131.24. 131.24, which is approximately about there, okay? And let me get my crosshair tool just to verify that. Okay, just a second. Or I'm sorry. Here's my horizontal 130. I said look at buys for above 131.24. Okay, so click on that. I want to bring it down a bit. 131.24. Okay, so we're close. Take a look at the side. Okay, it's right here. Okay, so I said look for buys above this level. Wow, look at that. This is what you would have made. Immediately you again, right here, if you would have placed a buy stop based on this candle right there, you would have made first go about 60, 65, 70 pips or more, and then holding on to trade, you would have made even a little bit more. Okay, so this would have been a really good winner for you. Okay, and for this week, I'm saying look for buys above 133.20, 26 right there. Okay, and to the downside, look for sells below 132.46. Now, this is a reversal pattern right here. We've hit the resistance. You can see we have a doji candle in the middle, and then we have a large bearish pin bar. Take a look. So buyers tried to bring price up all the way to here. Sellers brought price all the way down here, and the doji was the indecision candle, or where the buyers and sellers were duking it out or fighting with each other. Nobody won that middle candle, but the sellers are in control now. So I kind of expect price to come down lower, and this is an area that you could look at. Price could come all the way down to here to this gray rectangle, and from here price could again bounce higher. Okay, let me just take that off because we're getting kind of messy. So price could come down, price could bounce higher, okay, or higher from here, okay, or price could even come down much lower. Okay, but anyways, to the downside below 132.46. Okay, so let me take that off. We're going to move on to oil. Look at that. With this huge candle, this is a huge candle, and normally after a huge candle we might have a bit of a retracement, but I kind of expect price to either come back down a bit and go higher, or from this point on just go higher immediately. Okay, so just watch for oil, and if oil goes up, that means the Canadian dollar should respond nicely. It'll be positive for the Canadian dollar, negative for the US dollar. So if you're trading US CAD, for instance, the go back to the last chart. Let me just take that off for a second. That means the US this pair US CAD will come down if oil keeps going up. Okay, just letting you know that's how it works when we're talking about currency pairs. In the CAD, the Canadian dollar is tied in heavily to the commodity oil. Okay, so let's go on to the next one, S Swiss Franc. With this one, there were no trade opportunities last week based on my levels. So for this week here, you can see I've got a tight levels here. So if you're thinking that price is going to go higher, look for buys above 0.9932 and lower below 0.9865, and here is my support area, or if price comes down lower, this could be your target right over here. Okay, so we've got the gray rectangle, and we've got this strong moving average right there. Also note down below, we have one pink bar on the short-term momentum. This is a momentum indicator, and that means the upside is weakening, so we possibly could be coming down further. Okay, so let me take that off. Let's go right to the US Japanese yen. There are, again, on this pair, there were no trade opportunities last week as well. So for this week, really simply, I'm saying if you think price is going to go higher, look for buys above 110.73, to the downside below 109.16. So it's this pair. For this pair, price has to move a long way for me to be confident that the uptrend will continue. Right now, we're in a pullback area, pullback zone, and take a look here. price is really going sideways. It's down, up, down, you know, doji there. So we could go up a little bit and maybe down, but it's sideways. And the blue MACD line, this is the short-term momentum. That's on the 0 level. So we're just kind of going sideways. The bars here in the trending indicator, they're very small, also close to the 0. Okay, so let me move along to the next pair, and we're looking at Euro British Pound daily chart. Euro British Pound, and for last week, this was the one loser I mentioned about at the beginning of this video. You only would have lost about 20 pips, not a lot there. Okay, so only about 20 pips. Now here, price again is kind of going sideways. Take a look. The big, I don't use these to enter trades, the lower indicators below the chart, okay? But I do want to point out something important. They can add valuable information to your knowledge, trading knowledge, and take a look. Completely sideways, the blue line and the red line hugging the 0 level. There's the 0 level. So this is sideways. There's no momentum. No momentum to the upside or no momentum to the downside. Again, take a look. Very tiny candles. It's non-trending. This pair is non-trending. Okay? And as a matter of fact, you can see we're in a consolidation triangle. Okay? So take a look at the high wicks and shadows, or these are called wicks or tails above the candle bodies. Every time price goes higher, sellers try to bring it down. And every time price comes down, buyers bring it up. So we're consolidating, and sooner or later, price will shoot up either, and this is why I've got this level way up here. Look for buys above 0.8841 or to the downside after the consolidation is finished below 0.8726. Okay, now we move to Euro Japanese Yen, and here we're in a downtrending pattern again. Take a look. Pink below blue means downtrending pattern. We are basically looking for sells. So look, you can look for sells below 126.76 and buys in a counter trend. So when you see this upper level, the 128.63, if price is going to go higher, this is a counter trend move, and always be aware of impending resistance. So if price goes higher, it may not go higher for too long. In fact, it may only go up to about here or here and then come back down again. So the conservative traders wait for a clear direction. In this case, it would be a sell, okay, or sell below here. And the aggressive traders who want to make pips quickly are looking for counter trend trades to the upside. Okay, so with this pair, the Euro Japanese Yen, let me take a look. Last week, there was an opportunity to make 25 pips, but not that much more. Okay, so now we get to the Euro Audi. Last week you could have made 24 pips plus another additional 38 pips by holding on to your trade, because I did give you a level buy above 156.36. So buy, let me just draw in that horizontal line, 156.36. So let me just drag that just up a little bit. Okay, right about there. So last week, you see, this is what happened. These are all the price movement from last week, but this is the starting point, right? This red vertical line. So I did give you this level right here, buy above 156.36, and then you would have made from here to here, from here to here by holding on to the trade. So you would have made some pips regardless, okay? For this week, I'm looking at buys above 157.56, and to the downside below 156.14. Okay, so again, the range is fairly narrow. We are in a uptrending pattern. Well, it is a deep pullback. So here, pink below blue, that means we're in a downtrend, but we're in a deep pullback. So price would have to go higher than this for us to have some confidence that price will keep on going higher. Now we've got one last pair, and let's take a look. British pound, Japanese yen. Okay, so this one is trying to come down further, but again, the last 3 trading days, Wednesday, Thursday, Friday, it's been going up higher. And watch this trend line right here. See this trend line? Okay, I've joined the previous swing highs. So price, watch, see if price goes above this trend line and above this this gray rectangle. This would be considered right here kind of a major resistance level. Okay, and price, if watch to see if price either goes higher or price bounces and starts coming back lower. So there is an opportunity, I think, for a counter trend here. This is what I'm thinking. Look for buys above. Look for buys above 146.39 for a short-term counter trend. And to the downside, again, I've drawn in a target area. You could look at sells below 145.43. So again, have a little bit of patience on this one, and we'll see what happens. Okay, so that's what I see for this coming week. Oh, and last week, I'm sorry, this one was a big winner too, because this was good for 127 pips just based on the information I give you in my brand new course called Forex Success in 5 Weeks. Let me take that off. And last week, I talked about a sell below 146.16. So let's draw in the let's draw on a line. So I said you could look at sells below 146.16. Okay, so that was that's about there. Okay, let me just drag this down a little bit. Look at the right, my red line here, 146. Okay, there's 17, so it's pretty close. I said look for sells below 146.16. Take a look. This candle right here, I teach this in my course. This candle is a trend continuation candle. It's a pullback trend continuation. You could have gotten in right at the next, right there. Okay, stop loss above the signal right there. So there's your stop. Look at that. Entry, stop loss, 1-to-1 at least there. You would have made a little bit more with the end of that daily candle. So this would have been a really big move for you. But I also want to show you one more important thing. For those people who have also gotten my course and are taking the lessons, and for those people that perhaps are thinking about taking my course, take a look at this candle right here. Here is downtrend, pink below blue, pullback, which is what we want to see. Candle breaks, big black candle breaks below the 8. This is an aggressive pullback signal. Get in right there, and you would have made from here all the way down to there. Your stop loss above the previous swing high, or above this signal candle right here. This is called the aggressive pullback, the A pullback signal. I teach that in the course, and if you would have gotten in early at the end of last week, okay, let me just take my crosshair, you would have made about 175 pips. Fantastic. Getting in after this signal, which I teach in the course, it's super simple. I'll give you exact signals to look for in a downtrend. And this is a signal. It's even got a little red dot and a big red arrow. There's the signal, okay? Getting in right there without having to think about any further price action or anything else. Getting in after this candle right there, you would have made also about 140 pips or so. Okay, so that's it, everybody. And I'm going to switch to my last chart here. It's the same as the previous one. Remember, if you're not a subscriber, click on the subscribe button and I'll make sure you get these videos every single week. If you want some more information, email me. My name is Martin at mskyj007@gmail.com. Everyone, take care, and we'll talk to you again next week. Bye for now.